Hello, everyone. Happy Friday, and welcome again to another episode of Challenger Network News. I'm Brennan Bickler, partner at Elixir. Today, we're going to be talking about cryptocurrencies. For years, many banks around the world have been opposed to the adoption of crypto, actively working with government bodies to restrict usage. In the recent years, we've seen a little bit of a shift. Established banks and digital challenger banks have begun to release their own crypto products. They've been working with crypto exchanges and other parties where companies have aggressively blocked that usage. And recently in the news in the UK, cryptocurrency exchange Binance has been banned from operating in the UK by the market regulator in a latest sign of a growing crackdown in crypto market around the world. China, for example, has been urging banks and payment firms not to offer crypto-related services. So what's really going on here? As on one hand, we see collaboration and progression in terms of products and services, and on the other hand, we see what seems to be a crackdown. Today, we're going to try to find out by speaking to Julian Sawyer. Julian, welcome to the show.
Hi there, thank you for inviting me.
Great to have you on. Julian's the CEO of Bitstamp, which is the world's longest running cryptocurrency exchange. And we're going to talk about the relationship between banking and the crypto industry. Should there be a synergy? And if so, how should we be working together? And as always on the show, we'd love to hear from you. Please join in the debate, ask us a question. We'll answer it live on the show, or just join in the debate if you want to make a point of view, and we'll address that as well. So Julian, maybe we could start off by just from your vantage point, just how do you see the financial service industry dealing with crypto assets? What's the activity that you're seeing at the moment?
So I think what we're seeing is two industries, crypto and financial services, coming together. And I think it is just a different type of asset, it's a different type of product within financial services. So at Bitstamp, we are a financial services business doing crypto. And I think, what does that really mean? So if you get under the covers of a statement like that, it means regulation, it means compliance, it means risk, it means having all those controls and doing best practice to ultimately look after consumers' money. That is super, super important. I think what we're seeing with some of the other news articles, which you mentioned in the opening statement, is you've got other organizations that perhaps are not considering themselves as financial services, are considering themselves as in an unregulated state. Perhaps they're not regulated under the European Union or the UK, etc. And so therefore what you're seeing is a much lax approach to financial services and looking after people's money. And I think that's really where the FCA in the UK is really looking at this, which is has the customers' money being protected? Are we looking after them? And is that right and safe and secure? Ultimately, this comes to everything that financial services is about, which is trust, which is, can we ensure that your money is safe and it is reliable, stable from an infrastructure point of view, from a reliability, as well as from an AML and KYC basis. So if you look at the macro level, I think what is important is not all exchanges are equal. And I think one of the things that we have to do at Bitstamp is to ensure that we're starting to educate consumers, to educate them to what this means in terms of a good exchange. Just the way that banks have done this over many, many years, to say this is what a bank is. A bank is where it's safe and secure to put your money. And we are exactly the same.
That's really interesting. We've seen it, for nearly a decade now, where really, let's call them tech firms, have entered into the financial services space, and we've seen some hard lessons learned along the way, where they've had to learn about the importance of regulation, the importance. I mean, we're dealing with people's money here, and so rightfully so. And what I guess what you're saying is there really are those who are approaching more from the tech angle, doing some great stuff, but are either naive or haven't done enough diligence to get the proper controls in place. Having said that, there's those like maybe yourself that understand the industry, come from the industry, obviously are bringing tech innovation into the whole scenario, but also know what fundamentally you have to have in place to build that trust and in a regulated environment. Is that correct?
Yeah, it is. And I think one of the things I've spent quite a few years speaking about, both when I was working at Starling Bank, where I was a co-founder, which obviously is a challenger bank, and also at Bitstamp, is what do we mean by fintech? And fintech is a collection of fin and technology. And we've all seen companies that are great at the technology but don't understand financial services. And we've seen a lot of the incumbent banks and other providers who are great at the fin but not at the tech. So for us, it's about having the technology, the product, the focus on customer as a heart of what we do at Bitstamp, but also having the security, the resilience, the controls in place to ensure that people's money is safe and well. And that's one of the reasons why we became the first exchange in Europe to be regulated. We went to Luxembourg, one of the traditional financial services hubs within Europe. And that was to ensure that we could provide that both for our institutional clients and also for our retail clients.
Interesting. We've actually had a question come in. Why don't we go ahead and take it from David Porter? How do you see exchange control regulations evolving in light of borderless crypto assets?
I think this is always going to be a challenge, which has probably got a bit of a journey to go on. So I guess if you unpack David's question a little bit, what we're seeing is it's a global product. You're talking 24/7, which is very different than traditional financial services, which is obviously typically regional based or country based, and is within the normal banking hours, etc. So there will need to be more controls in place. Regulation is coming in a whole range of different ways. One of the things that we're seeing in the UK and in Europe is how they've implemented the Fifth Money Laundering Directive, which I know isn't probably not the most exciting thing on a Friday afternoon to talk about. But what has happened is that there has been different interpretations of that by various different EU states. And what we're really hoping for is that best practice comes out and we can normalize that, because that enables we can give protection to consumers and institutions, but it also means that we all understand what the level playing field is. And I think what we're seeing is with some of the regulatory interventions over the last few weeks globally, we're seeing this nervousness in terms of where are these entities operating from? Can we find the head office? Can we have line of sight to the senior managers, to the authorized managers, to the directors, etc.? And can we demonstrate the controls are in place from a money laundering perspective, KYC, KYT? So I think, David, it's kind of a little bit of a journey in terms of what do we mean by borderless crypto assets. But that is where this industry is so exciting. This is the fastest growing part of financial services. It is, running at 100 miles an hour, and that is super exciting to be part of. But what it does mean is we need to be thinking and engaging with the regulators to ensure we all understand what good looks like.
Yeah, that makes a lot of sense to me. I mean, we've always seen that, as a part of financial services begins to mature. Obviously, the new regulation is going to come because it's new territory. So, sometimes you see media headlines that sound a little bit spectacular in their statements, and that it can cause panic or worry. But really, what we're seeing, what I think you're saying is, it's really just a maturing of the industry. It's new, and so the regulations need to catch up with where it's going, and that's why that collaborative approach with regulators is so key.
And we've seen that time and time again in financial services, where new technology, new products, new features, etc., come, and the regulation has to catch up. So I think we have an obligation at Bitstamp to ensure that the regulators understand where we're coming from, we understand where they're coming from, and understand where that crossover is. And that is really important for us to engage. At the end of the day, this is, again, probably not what we want to hear on a Friday, but you have to feel sorry for them in a way in terms of the regulators. They've got so much to do. And this is a very, very technically rich product set that we all have to work through, and it's moving at such a fast pace. So it is about ensuring that we have got that level of understanding. And a lot of what's important is the way you communicate with the regulators to ensure that they understand what and how and where we're coming from.
Yeah, that makes a lot of sense. Well, let's shift gears a little bit. We were talking prior to the show a little bit about some of the use cases that you're seeing emerge with Bitstamp. Why don't you tell us a little bit about one or two of those use cases?
Yeah, I think what I find really interesting is the headlines from a lot of journalists is written at all about Bitcoin. And actually, the digital asset industry is fundamentally wider, deeper, and more exciting than just one asset. And I think that becomes important that we communicate and tell people about some of the things that we are doing. We just signed a deal with a British company called Zebedee that sits behind computer game manufacturers. And therefore, if you want to buy additional weapons on Counter-Strike or different levels or whatever you want to do, how do you actually monetize that as a game manufacturer? And of course, you can use credit cards, debit cards, but then you've got a whole range of things like fraud and chargebacks and all kinds of complexity. So why don't you use a global asset like a cryptocurrency? So what Zebedee does is, working with us, would enable you to go and buy for £10 or 10 euros. You would buy some Bitcoin and you'd be able to buy that and use that within Counter-Strike. And also then if you have some winnings and you want to bring that back out of the game world into the normal fiat world, then again, you've got that. So what I think is really interesting is that you're going to get a whole bunch of people who are not engaged in Bitcoin, who don't care about cryptocurrencies, but want to play some computer games. And having those people suddenly engaging with us as an entity, I think is really exciting. So what we're seeing now is, if you think of the normal bell curve of early adopters and innovators, we're getting to that mass market and we're solving real problems. So the real problem there is, how do I monetize the game? How do I collect money from everyone in the world without having to have hundreds of bank accounts around the world and having all the issues with frauds and chargebacks, etc. And all of a sudden we've solved their problem. So what Zebedee are doing is really, really exciting, to be able to use our exchange to be able to purchase that. We've also done a deal with a real estate company in New York, KPG, who want to provide their tenants with an ability to pay by crypto assets, whether that's stable coin or Bitcoin. Again, what we're seeing is a use case where people have got an asset. They don't want to put it back into fiat, into US dollars, to then go and pay for the real estate. But they also want to do it in real time. And that becomes super important. So we in the UK and in Europe are very used to real-time payments with faster payments or SEPA instants and things like that. In the United States and various other countries, we don't have that real time in the same way that we're used to. So actually being able to use this to solve a problem is super important. And so what we're seeing is we're now getting companies who are listening to what customers are wanting and saying, okay, I now need to be able to accept Bitcoin or whatever to be able to sell my products, or I need to use this to sell or to pay for my suppliers. So what we're seeing is lots of different conversations that we weren't having 2 years ago, which is around about CFOs, corporates thinking about, what does this mean? Am I going to be able to provide this as a payment option to my customers? Am I going to pay my suppliers? Does this help me to move money around the world? Is it making me more efficient? Those conversations were not happening. They are happening now, and that is really, really important.
And the more use cases that come, and the more trust that's going to be built in this system. I think and that's kind of been the problem with crypto to date is, okay, depending on what Elon Musk says on Tuesday, the currency either, has a boom or bust, which leads us to a question that Bilal has asked. Maybe we can go to that. Bitcoin and cryptocurrency is highly volatile with a track record of boom and bust cycles, like we just mentioned. How is the banking industry working towards mitigating the risks of cryptocurrency eroding in value, or in the likelihood of a potential crash, which many people seem to be predicting?
So I think we should separate these things. Bitcoin is a volatile stock. That is why people go in, because they wish to trade. And if there wasn't any volatility, there wouldn't be any trading, because there's no upside.
Right.
So there was market opportunity. We have plenty of other assets in the world which are highly volatile, whether that's oil or wheat or whatever. We can all trade. Okay, this is just one asset. The point that I think is really interesting is that a whole range of cryptocurrencies which enable you to do different things. So there's stable coins which are pegged typically to the US dollar or the euro or whatever. That would provide a different use case in terms of payments, where you wouldn't really want your salary paid in Bitcoin because it would probably move too much and that risk is too high for you. But being paid in other cryptocurrencies are really important. And then you've got different use cases. So for instance, on the web browser Brave, if you start reading content, you can get BAT tokens, and therefore you can be paid to read content rather than having all that money going into the likes of Google, etc. So again, that becomes really important. So I think this is about unpacking the headline into, well, what does this mean? And yes, Bitcoin has a volatility. We understand that. That is useful for some use cases for some people that want to trade and do things. If you're looking for making payments, if you're looking for investments, etc. And so what this is about education. It's also about ensuring that that banks and institutions understand the use case for this. And just I want to peel back for one other layer here. If you think about what we're talking about here, we're talking about a technology layer, which is the blockchain. Okay, what we're seeing is that is now taken as a very, very strong technology that can be used. And so we've got central banks looking at it. We've got various other things, and then we've got various applications. And that is the interesting point: is what are those applications are used for particular use cases, and that becomes interesting. And so therefore what I can see is that some people in some banks will say, well, I like those assets, but I don't want those assets because those are going to be more volatile, but these are stable coins or there for different purposes. So I think what we've got is a category called cryptocurrencies. Underneath there we've got a whole range of different applications for it.
Yeah, and it's funny. I did a study recently looking at what were the key catalysts of innovation over decades, and it's no surprise. It's when we have game-changing infrastructure is when it happens, because when people start to build on top of the infrastructure, that's when the proliferation of applications occur. And like you said, some applications are more volatile, and other applications are less volatile and more stable.
Yes.
So that makes tons of sense. In fact, I thought Mike Wright has asked an interesting question, a little bit kind of what we're talking about, more on the stable side potentially. Regulators understand and have long existing relationships with banks better perhaps. So is it an easier path to integrate and partner with banks because of that relationship, or is it best to go direct and work with regulators directly, or is it an and?
I think it's an and or an or. I think for us, we have institutions, we have banks as our customers who use us as an exchange, and they sell our products and assets to their customers. We have a huge B2B2C player, so we power a number of typically what you call fintechs in terms of offering crypto assets to them, and then we have our B2C direct proposition. And I think that is a healthy mix for those three areas. What I think is important is there are a number of banks that have gone into crypto, and we obviously partner with all of those. But I think it's also important that we understand what the customer demand is. So when you have got customers coming in saying, we would like to have this, we want to go to this exchange, we want to fund our accounts, etc., then the banks have to listen to what is happening. And what we are seeing is a shift in the regulatory tone and the banking risk compliance tone to understand what are the issues. And I guess you mentioned right at the beginning, there's a couple of banks in the UK that have stopped, and Binance, they haven't stopped cryptocurrencies. They haven't stopped Bitstamp at all. They've just said, this is an actor that we don't want in the ecosystem. We are not going to work with that. We have that across the board. You have that with Visa and MasterCard stopping merchants who are bad actors. You have this within faster payments and CHAPS payments. You have that in SEPA. And so that's not an unusual thing. It's creating a nice headline and a buzz, fine. But actually, it is about ensuring that we can do that. And I think for us, what we're seeing is we're having more conversations with banks. I can't think of one bank that is not thinking about crypto assets, cryptocurrencies, blockchain. Now, they may not be doing something, they may be looking, they may be waiting, but for us to be seeing people like Fidelity, JP Morgan, State Street, etc., all going into this is just showing a direction of travel. And for us, the more traditional finance comes in and engages, the better it is in terms of trust for consumers.
Absolutely. We're getting lots of questions in, and I think that's great. In fact, please continue to ask, because if we don't get the chance to answer all of them here, we'll go offline and continue engaging with you in the channels where you're engaging with us. I do want to take a question from Keith Bear. Keith asks, will Mika help or hinder the crypto industry in Europe? And should the UK do something similar?
I think it would help. Okay. So, my mindset is that regulation is there for good reasons. And I think I've said that probably a few times this afternoon. So it is about doing it right. Now, where I think there is pain is when the implementation of that doesn't make sense. it is actually hinders those actors that want to play on the rules against those actors who are outside, for instance, outside the European Union, etc. And so we need to ensure that we've got a level playing field. We're super happy to play on that level playing field, and that this is all about protection of the financial services industry, and it's about protection of money and consumers' money and institutions' money. So anything that helps in that to get that level of trust up is really, really important. And I guess if you go into the banking world, you've got the European deposit scheme. In the UK, it's the FSCS scheme. That we all know that we've got 100,000 euros, 85,000 pounds. We got that guaranteed. We know that is a level of trust. So we need to have that level of trust in the crypto industry. So for us, when these regulations come out and they get the level playing field, that is really important for us.
Yeah, so it's about more use cases, more collaborations. Actually, it is about weeding out bad actors so that the entire ecosystem is just building more and more trust, more and more diversity, more and more reliability of, like you said, KYC, anti-money laundering, and more education so that consumers know what they're getting into as they're starting to buy these assets.
Yeah, and that will move people from putting £50 or 100 euros in to now saying, actually, I want to put more of my investments within a portfolio. And we're not here to give advice, but we need to get people to start engaging in this asset class because it's super important alongside all the other asset classes.
Well, it sounds like our kids are going to be approaching all of us parents very shortly with wanting to buy crypto for their games.
Indeed they are. Yes.
Coming your way to all parents out there. So look forward to that. Julian, it's been an absolute pleasure to chat with you today. I know it's short and sharp. We'll continue to engage with people in the comments offline. If you have any questions or more comments, please do reach out to us or directly to Julian on social, and we'll keep engaging. Julian, it's been an absolute pleasure, and all the best to Bitstamp. I really wish you all the best as you move forward, and I look forward to staying in touch. That's all we have for this week's episode of Challenger Network News. We look forward to seeing you again next week for another episode. In the meantime, have a great weekend. We'll see you soon. Thank you.